Hey, hello investors and future investors. Welcome to the channel. For today's video, I will be giving you some option strategies. I also will be giving you some stocks that can be traded if you're trading with an account value of $1,000 or less. Now, I understand the struggle if you only have $1,000 or less in your account portfolio. I understand the struggle because I have grown a small account portfolio from $300 all the way to $14,000 in under a year. So I know it can be done. Now, if you're new to options trading and you're trying to use options in order to make some additional income in conjunction with your already 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you how to trade a small account portfolio, in particular, $1,000 or less in that portfolio. We're going to go through some option strategies that has been proven to work, and I do have other videos on the channel detailing these option strategies, so feel free to go ahead and check those out. Now, when you have a small account portfolio, in this case of $1,000 or less, you will need to take a few chances, not very risky chances, but you do need to get outside your comfort zone just a tad. That being said, our stock for today is going to be Big Bear AI, and that ticker is going to be BBAI. Now, this is a very speculative stock. I just want to let you guys know that off the bat. While I'm letting you know this is speculative, I also have two requirements that you should be aware of. Requirement number one, always make sure to do your own due diligence before investing. What might work for my portfolio may not work for your portfolio. The second requirement is always make sure you have an exit strategy before entering any options trade. That way, if the trade decides to go against you, then you know how to get out of the trade. That being said, you guys know how we do it. Let's go ahead and get down and dirty with options. Now, for I did mention Big Bear AI is a very speculative stock. However, the stock is paying some awesome premium. So I decided to use this stock today for this video. Now, this is what we're going to go ahead and do. We're going to go down to the bottom and hit trade BBAI options in the bottom in order for us to go ahead and open up our options chain. Now, the option chain is the entirety of this area down here. And what the option chain does is that it gives us enough information in order for us to make a very informed decision before getting into any options contract. Now, this is what we're going to do with BBAI. We're going to be going to sell, we're going to be going to put, and now we're going to go ahead and choose our expiration date. The expiration date that I would use for this is going to be around 30 days out. So that's going to coincide with August 8th. What you're actually trying to do right here is give yourself a paycheck every month. And don't worry, I will show you an exit strategy for these options trades that we're going to demonstrate in today's video. This is just the first option strategy and the first stock we're going to use as a demonstration. I will do the next one at the back end of this video. Now that we have sell and we have put and we have our expiration date 30 days out, this is what we're going to go ahead and do. We're going to simply scroll down and we're going to be looking for a strike price. Now, the strike price I will be choosing is going to be the $6 strike price. Now, the criteria for me choosing the $6 strike price is because it has like around a 70% chance of profitability. This stock has been doing nothing but going up for the last couple of weeks. Go ahead and check out the charts on this stock before even thinking about trading this stock. So, my only criteria for the $6 strike price is because this stock is in an upward trend and I am doing a bullish option strategy. Now, with the $6 strike price and a 70% chance of profitability, we're going to go ahead and click into that. Now, this is an income generating option strategy, meaning as soon as you do this trade and you go ahead and execute, you will be getting paid. Now, for this particular trade, the amount you will be getting paid is going to be 0.55 or $55. In options trading, your 0.55 is always going to be multiplied by 100 shares because one contract contains 100 shares. So that's going to give you an income that you get to keep of $55. This option strategy using Big Bear AI is going to be known as the cash secured put. Now, this is why I decided to use this particular stock for this option strategy, the premiums. The premiums are very lucrative. The premiums are extremely, extremely juicy. The amount of money you're going to be receiving is going to be $55. In order for you to do this option strategy, the cash secured put, you will be required to leave a collateral. The collateral you're going to be leaving is going to be $600. Now, how did I come up with the $600? Well, that's quite simple. You're going to multiply 100 shares, which each contract does contain, by whatever strike price you choose. In this case, it's going to be $6. Hence, we have $600. Now, what you're going to go ahead and do, you're going to not focus too much on your nominal return. Your nominal return in this case is going to be $55. What you're going to do is that you're going to focus on your percentage return. So you're going to simply divide your $55 of the income that you received. You're going to divide that by your collateral of $600 that we just went over, and that should give you a return of 9%. Now, for those of you new to options trading, a 9% return in 30 days doing option trading from the comfort of your own home is an extremely generous return. So that's why I chose to use BBAI stock, because I get a very lucrative return, and the strike price I went ahead to choose, the $6 strike price, in my opinion, is very conservative. Now, in order for you to get consistent income with this particular stock and this particular option strategy, it's quite simple. All you need to do is just rinse, repeat. Now, real briefly, I'm going to go over how this trade could go. So, there's actually just two ways this trade could go. Come expiration date of August 8th, if BBAI is trading at any price above your $6 price right here, then you get to keep your $55. You're going to get your $600 released back to you. And now you could go ahead and keep rinse and repeat this option strategy until you get a sign. Here's a professional tip for you. If you get your $600 released back to you and you're able to keep your $55, the next time that you go ahead and do this option strategy, feel free to go ahead and do it again for additional 30 days. And this time, you could probably increase your strike price. Instead of the $6, you could probably go up by 6.5. But remember, this is only based on the information I have right now. We need to wait until 4 weeks from now to see what the market gives us. Always trade with the trend of the market. Now, the other way that this trade could go, once expiration day does come around, if this share price of $7 does happen to drop below the $6 price here, then now, once again, you're going to keep your $55 and then you're going to lose your collateral of $600. But this is also known as a win-win option strategy, because the way you're going to win when you lose is that now, although you lose your $600 as collateral, you're going to gain in your portfolio 100 shares of BBAI stock. Now, you do lose your collateral and you do gain shares. The reason why I see it as a win is because now you're able to pick up 100 shares of a stock at $6 per share, as opposed to 4 weeks ago, it was trading at $7.34 per share, saving yourself around $130. So, hence a win win option strategy. Now, very importantly, by leaving $600 for this particular option strategy, that's going to represent just 60% of your portfolio. So you're still going to have 40% of your portfolio as liquid cash in case you need to do anything else. Now, the other option strategy that I would be doing if I'm trading with a small account portfolio of $1,000 or less, let's go ahead and get into that now. We're going to go ahead and we're going to change the stock. We're going to be going to Spider ETF, and that ticker is going to be SPY. Now, I'm going to go ahead and give you a free resource that can be used in order for you to increase the chance of these trades going in your favor as soon as I decide to go ahead and show you the option strategy. So once again, let's go ahead to trade SPY options down to the bottom. Now we're going to go to sell. We're going to go to put, and we're going to choose our expiration date. Let's go for around the same monthly. Let's go with August 1st, which gives us like 23 days to expiration. Now, I know it does look like the exact same strategy, but trust me, it's not. Now we're going to go ahead and we're going to choose our strike price. The strike price I will be going with is going to be, let's go down. We're going to be using the 609 strike price right here. Now, I'm going to give you the criteria why I use the 609 strike price after I show you the option strategy. Now, with the 609 strike price, I'm going to have a chance of profitability of around 80%, meaning there's an 80% chance that this trade is going to go in my favor. So I'm going to go ahead, I'm going to select that. Now I'm going to go ahead and add a second leg to this option strategy by going to buy and put, and I'm going to maintain the exact same strike date. This time, however, I'm going to go and choose a strike price right below my previous strike price of 609. So I'm going to go ahead with a 608. Let's go ahead and I'm going to select that one again. We're going to hit continue and we're going to hit review. Now, if you're trading with a small account portfolio of $1,000 or less, this is a great option strategy for you to employ. This option strategy is none other than the put credit spread. The reason why this is perfect for a small account portfolio is because of the barrier to entry. If you were to do this option strategy, the amount of collateral you would have to leave is only going to be $100. Now, the return on this is going to be 16.92 or $17. Now, once again, I did mention at the first half of this video, don't worry too much about a nominal value of the income you're going to be receiving. Always make sure to focus more on the percentage gain. Now, your percentage gain in this case is going to be your $17. You're going to divide that by the amount of money you need to leave for collateral, which is going to be the $100. So your percentage gain in this trade is going to be 17%. Now, if I mention that a 9% is an extremely lucrative return, imagine for 17% in your portfolio. Now, I'm going to go ahead, I'm going to give you a free resource which is going to help you choose your strike price, and then I'm going to show you how to exit these trades. So let's go ahead into a new tab right now. Now, this is quite simple. All you need to do, you need to type out whatever information you need. So this is what I'm going to type. I'm going to type SPY expected move, and I'm going to put in bar chart and I'm going to hit enter. Then I'm going to go ahead and I'm going to look for barchart.com right here. I'm going to open that up. Let's give it a little chance to load, and then I'm going to show you exactly what it is I'm looking for. So now I'm going to go ahead, I'm going to scroll down, and then you could see here, this is all the expected moves that the analyst says is going to go to, and also the dates right here. So how did I come up with the 609? Let's go ahead. I'm going to choose the strike price, which was August 1st right here. I'm going to go ahead. I'm going to go all the way down the line, and it's telling me that the lowest price that SPY may hit, and again, this is just a calculated guesstimate, it's not accurate. It is just based on statistical information. So this column here tells you at that date, the lowest price is expected for it to go is going to be the 609. On the upper end, the highest price SPY should be traded is around 638.38. So I usually use this bit of information just to increase the odds of the trade going in my favor. Once again, that's going to be barcharts.com, and what you're looking for this particular option strategy is the lower end. Now let's go ahead and get back to Robinhood. Now, here is how you exit this trade and the one before. Before expiration date, what you want to do is that you want to close off your trade. You're going to need to decide for yourself what your expected goals on this is. For me personally and my portfolio, whenever I'm doing a spread, I usually like to close my spread off whenever I have a percentage return of around 50% or more. That's right, 50% or more, then I'm going to be looking to close off the trade. Now, the other strategy, which is the cash secured put, I look to get out of the trade whenever I'm up around 75% or more. Those are my exit strategies. Now, the reason why the percentages are different is because the strategies are different. One is a win-win option strategy, which is the cash secured put, and the put credit spread is a defined risk option strategy. So there are two different strategies. The reason why it's a defined risk is that there's a certain amount of money that you can lose. The cash secured put is a win-win option strategy because no matter how the trade goes, you still end up winning, either with your collateral released back to you or you do end up with the shares. So there you have it, investors and future investors. I know and I do understand the difficulties of trading with a small account portfolio, especially one with $1,000 or less. If I were to be back in that situation right now, this is the option strategies I would be using, and these are two stocks I would be using with those option strategies. Now, if you guys want me to make more videos about the option strategies and stocks that could be used with $2,000 portfolio, $3,000 portfolio, and upwards, just let me know in the comments below. If you do have an options portfolio of $2,000 or less, in the comments, just put $2,000. And likewise, if you have one with $3,000, I will go ahead and make those videos. Now, if you haven't already, this is going to be the perfect opportunity for you guys to go ahead and like the video. Subscribe to the channel. Make sure to go ahead and hit the notification bell to get an alert whenever I post a video. But here's the most important part. The reason why I made these videos is that I'm trying to give as much free content out there in order to help people with a 9 to 5 get additional source of income. And if you're able to get anything from my videos and then you are able to make some additional income by trading options, then I have achieved my goal. Now, the way you guys could help me and other people is by sharing this video with them. So if you know anyone out there struggling to grow a small account portfolio, the right thing to do is to go ahead and share this video with them. We're going to try to help as many as we can make some additional income with options trading. Now, until the next video, keep pushing your investments.